Keeps blocking black wealth. We digging deep to free ourselves.
Welcome back to Who Keeps Blocking Black Wealth. I'm Dana. Today we're talking about financial myths, the stories that sound true, feel comforting, and quietly turn into barriers. Let's unmask it.
And I'm Harold, because some things are not holding you back, they're just unexamined.
Before we get into today's topic, let's talk about what's going on and why it matters to us. Now, if you recall, we talked about oil prices in the last episode. This week, we can pretty much wash, rinse, and repeat. Geopolitical tension in the Middle East is still driving uncertainty, and oil prices are still elevated, trying to get under that $100 per barrel mark, but not succeeding for long.
So nothing really changed. Just the pressure stayed on.
Exactly. And remember, when oil prices stay high, that affects transportation, food costs, and overall inflation. At the same time, we're seeing major institutions reposition, Goldman Sachs expanding into ETFs, and capital becoming more intentional about where it flows.
Hold on. Why should anybody listening care about that?
Because when large institutions shift where money flows, they influence which businesses grow, which opportunities expand, and who gets access. So even if you're not investing directly, you're still living inside the outcomes of those decisions. And then there's private credit. We've seen funds begin limiting withdrawals after a surge in redemption requests.
So the folks with the money can't even get their money when they want it?
In some cases, not immediately, because those investments aren't designed for quick access.
That sounds familiar. Is that the canary in the coal mine?
It's a signal. That access and control over money, it doesn't always work the way people assume. And mortgage rates are climbing again, making it more expensive just to buy a starter home. So when you put all of this together, higher energy costs, tighter capital access, restricted liquidity, higher borrowing costs, you can see how wealth gets blocked.
It ain't one door slammed. It's every door getting harder to open.
You know, when you step back and look at everything we just talked about, access, control, who can move, and when they can move, Scripture has already been speaking to this. In Ecclesiastes, it says, "As goods increase, so do those who consume them. And what benefit are they to the owners except to feast their eyes on them?" That explains supply and demand. Yes, oil companies can pump more oil out of the ground thanks to God's forethought. You know, fossilized dinosaurs became petroleum, it all. But the world's population, the number of consumers, tends to keep up with, if not sometimes exceed, production capacity. The petroleum companies do not benefit from pumping oil out of the ground and just letting it sit in storage facilities. Pretty much describing where we are in a nutshell. More importantly, it's saying just because something belongs to you doesn't mean you control how it functions. Ownership and controls are not always equal.
Now let me sit something next to that. Proverbs says, "The rich rule over the poor, and the borrower is servant to the lender." That ain't just about money. That's about position. Because whoever controls access controls the outcome. If you got to ask for permission, you ain't in control. You're just an unwitting participant.
So when you put those together, you start to see the system more clearly. One is showing you that ownership doesn't guarantee control, and the other is showing you that access determines position. That's global in structure and local in how it shows up in people's lives.
And that's where it gets personal. Because you can think something is yours, your money, your opportunity, and then find out real quick you don't control when you can use it or how you can move it. That'll change how you look at things.
And then in the New Testament, 1 Timothy brings it all together. For the love of money is the root of all kinds of evil. And some people, eager for money, have wandered from the faith and pierced themselves with many griefs. This scripture is famously misquoted. Money does answer all things. The love of money, the chase after it, the morals you compromise, the ethics you break in order to obtain said money, that is the problem. Pulling from today's headlines, are you willing to share confidential or classified information with your circle so they can make financial trades or bet on a political platform? How far down the rabbit hole are you willing to go? And just a few verses later, command those who are rich in this present world not to be arrogant nor to put their hope in wealth, which is so uncertain. Because that's the final layer, not just how money works, but how people relate to it. If you place your confidence in something you don't control, you're setting yourself up for instability.
Yeah, that's the part people don't sit with. It ain't just about having money. It's about understanding what you actually control. Because once you see that God is actually in control, you stop assuming everything will remain constant, and you start moving different. That's that faith walk.
Before Deacon Tate takes over this episode, I need a coffee break.
All right, before Dana turns this into a full financial revival, let's take a coffee break.
And honestly, if you're trying to keep up with markets, policy, and all the ways money moves, you need to stay sharp. That's why I like strong coffee. It's not just coffee for a quick jolt, and it's built to help you stay focused and steady without feeling all over the place later.
Which is useful, because this economy already got enough people feeling jittery.
Exactly. So if you want to try it for yourself, use code WKBBW. That's code WKBBW. Same coffee, less money. Also,
Stay awake, stay aware. And now let's get back to it. I said this before, and it bears repeating. The number that keeps me up at night, the average person in a banking desert losing $40,000 over their lifetime just to cash their paychecks. That's not just money lost. It's dreams delayed, opportunities missed, and wealth that never had a chance to grow.
those numbers really put it in perspective. And what's even more troubling is how these banking deserts disproportionately affect Black communities.
You know what's fascinating about this? When you trace the history, you can see how modern banking practices are really just evolved versions of old discriminatory policies. Like redlining. While it's technically illegal now, its effects are still rippling through communities decades later.
Let me share something I learned recently about that. Neighborhoods that were redlined in the 1930s show property values about 35% lower than similar non-redlined areas today.
And here's what makes it even more complex. These historical practices didn't just affect housing. The data shows that even now, Black-owned businesses are twice as likely to be rejected for loans compared to white-owned businesses with identical profiles.
That reminds me of a recent study I read about credit algorithms. Even AI-driven lending decisions are perpetuating these biases because they're trained on historically discriminatory data.
Well, that's exactly why we need to look at the whole system. You know what really opened my eyes? In major cities, predominantly Black neighborhoods have an average of one bank branch per 50,000 residents, while in white neighborhoods, it's one per 5,000. Those disparities in basic access are just, well, they're mind-blowing when you really think about it.
And here's where it gets even more interesting. The rise of digital banking was supposed to solve this access problem, right? But studies show that about 40% of Black households are either unbanked or underbanked, compared to just 12% of white households.
So if we're seeing these same patterns repeat even with new technology, what solutions are actually working?
That's a crucial question. I've been following some promising developments, like the movement to support Black-owned banks. These institutions have seen a 150% increase in deposits over the past few years.
Though they still control less than 1% of total banking assets in the U.S., don't they?
Exactly right. And that small percentage really shows the scale of what we're dealing with. But you know what's encouraging? Some major corporations are now moving significant portions of their deposits to these banks.
That kind of institutional support could really change the game in terms of lending capacity.
Let me share something else that's fascinating. There's this new wave of community-based lending programs popping up. They're using things like peer-to-peer lending networks and community trust to bypass traditional banking altogether.
Those grassroots solutions often understand local needs in ways that big institutions just don't get.
And speaking of understanding local needs, some cities are now requiring banks to report detailed data about their lending practices. When you make these patterns public, it becomes much harder to hide discriminatory practices behind complex algorithms.
That transparency requirement is already showing results in places like Chicago and Philadelphia, isn't it?
Yes, and the data is pretty revealing. In Chicago, for instance, they found that certain neighborhoods were receiving less than 10% of the small business loans compared to areas with similar income levels but different racial demographics.
Those kinds of concrete numbers really help make the case for change.
You know what else is driving change? The younger generation's approach to banking. They're increasingly viewing their banking choices as social justice decisions, not just financial ones.
That shift in consciousness could really drive some meaningful change over time.
Well, here's what I think is most important to watch, how these various efforts combine to create systemic change. Because individual solutions, while important, won't be enough to address centuries of systematic exclusion.
That really brings us full circle to where we started, looking at how these barriers persist and evolve over time.
And that's exactly why these conversations matter so much. When we understand the history and see the patterns, we can start working on real solutions instead of just treating symptoms.
Let's hope these insights lead to meaningful action. The cost of maintaining these barriers is just too high for everyone.
So here's the truth. Wealth inequality isn't always about effort, it's about structure. And once you understand the structure, you stop being confused by the outcome.
And start moving different.
Exactly.
All this talk about systems got me tired.
Tired or just worn out from fighting reality.
Both.
Well, when it's time to actually rest, I'm reaching for my cozy earth sheets because after a long day like this, comfort isn't optional. These are made from viscose, from bamboo, super soft, breathable, and honestly, once you lay down, you're not getting back up. If you're going to recharge, you might as well do it right. Go to cozyearth.com. Use code WKBBW. Get 40% off. Wrap yourself in luxury.
Yeah, I'm logging off early tonight.
If this episode helped bring clarity, stay with us. Follow the show. Share it with someone who needs it. This show exists to shine a light on the knowledge our community has believed was hidden so we can understand it and use it to our advantage.
Because once you understand the rules,
you stop guessing. Pray, plan, prosper on purpose.
Share this with somebody who needs receipts.
Who keeps blocking black wealth? We digging deep to free ourselves. Faith, money, truth on the shelf. Let's talk about it, talk about it.
Who keeps blocking black wealth?
Not me, not today.
Check your credit and pray.